What's up, everybody? How we doing? Let's get our greetings in here. What's up, Guido? Hey, what's up, Mike M? Yeah, man. I mean, these options prices are hard to hate, I have to tell you. IV is down a little bit versus yesterday. We got a really big IV spike yesterday, actually. But that really sent these things up there. Very, very nice to sell into that. Because even though, yeah, what's nice about this too is even though IV comes down a bit here, we're about at $23 right now. We're about, I would say options prices are like 10%-ish below where they were at the same price yesterday. So that's just a difference of that's just a difference in IV right there, especially in the short term. How much did it? Yeah, and see the IV for Feb OPEX isn't even that high. It's 50%, man. It's 59 for today. Like these levels are crazy low. What is very high is the warrant stuff is very high. October is high relatively. April is high relatively. September 27 has weirdly high IV. Don't know what they think is going to go on there. And then June is also elevated. April and June are elevated, but the nearer term stuff is lower. Interesting. Very interesting, I must say. Guessing at the close below 23. Yeah, it looks like, how much more time we got? 45 minutes? We might hit it right on the nose. Maybe we retrace the VWAP at like 2275 or something. What's Max Pain for today? Max Pain is like it's 20 if you just go off GME, it's 21. Believe it or not, if you go off GME 1, oh no, GME 1 is April. No GME 1s this week. So yeah, it's 21. 21. 21, 21. It's 22 for February 13th, so it moved up a little bit. March is now at 23, or March 6th, I should say, is at 23. March OPEX is at 22. Yeah, who knows? Maybe we just kind of stay up a little bit versus. Well, let's bump over to some technicals before I get a little antsy on this thing. Daily. We slap these moving averages on. Yes, we can. Do a little technical read here. Yeah, so we're moved up right here back into our into moving average land rather than being down below here as we were for a while. We kind of hung out right around the 20-day moving average, which is pretty interesting. Now we're up here right around the 100 and the 500 and the 200 sitting above us at 24.22. So I don't know. Maybe we get a little taste at 24. I don't know. PMO says, oh, we did get a bullish daily cross. Well, no, that wasn't really a cross. Cross was way back January 14th was the bullish cross, believe it or not, on the PMO. We're very close to a zero line cross here. How about what's daily RSI doing? Daily RSI is very, very close to overbought. Daily RSI is at 66. And that's about where we tapped. That's where we tapped out the last time we popped up here. Last time, right before Q3 earnings, day before Q3 earnings, we topped out at 66. So that's daily RSI. Weekly RSI, maybe a little bit more room. Couple weeks. What else do I want to look at? I want to look at weekly PMO, maybe. Oops. I think weekly PMO, we still chill for a while. Yeah, we're not really close on weekly PMO here. I mean, if we do get across on the weekly here, this thing, we have started to upturn, but we did that back here. Maybe. Worth keeping an eye on, maybe. I mean, I think what we got to wait for, and this will probably take a while, is we got to get back to this, right? So we got to let Blue Boy here come down right around here. I think this is it, right? So we wait for Blue Boy right here to get down to this, like this trend line, which should dip basically right to the zero line. So we got to let this guy get down here, and then these will curl up, and then, well, how many weeks does that be? We might run the table. We might have a little something there. How many weeks? Because this is June to. Oh, we might, guys. Actually, I'm not trying to get too excited here because I'm not trying to. But let me make this a little bit bigger. We might get a weekly PMO cross in April if the cards are right. And weekly PMO crosses, I think, are a big deal here. I'm trying to think. Last time we got close, we flirted a bit in 2023. It looked like maybe we get across, but then they dumped us pretty hard in June of 2023. They do like to test that during the summer cycle there, right? Yeah, Rainbow Road season. I think we got a shot here. If this blue line matters, it might not. That's the thing. It might not. This is just a thing that I drew. But we are kind of, ooh. Oh, we might, though. Let's see, chat. What's up, chat? What's up? What's up? Sorry, I'm getting all excited over here. I'm not. Chat, are we the opposite of cooked? Oh, Reese Politics talked about me today. Hadouken, what? Hadouken, what did what did Reese Politics say? See, man, I don't know who reads my stuff. I don't know if anybody else. I'm like convinced that no one else that posts about GME, like that posts about GME, reads anything that I post. Because no one like ever quote tweets me. No one ever like it. Like obviously there's you guys, right? And like we talk to each other, and there's that thing, right? But like any of the other like major profiles, as far as I'm concerned, don't actually like don't read what I write, which is fine. They don't have to, but I'm surprised that somebody did. I cited an academic paper today, so maybe I have clout now. Yo, Chad, are we cooked? What's up, man? Yeah, for sure. RC buys, we're covered for MMT hedge. For sure. I think listen. I know I tend to lean a little bit more on the cautious side because I've been duped before, I've been hurt before. The real big monster signal is all kinds of stuff getting ready to cross. And I think Kitty really pointed out to us, importance down here. Yeah, we're super close. Look, if we look at his charts too. This is daily. Pretty close to RSI. Overbought here. We're pretty close. And on his stuff where he's only got the 100-day, it looks like we just come down again now after this. Maybe not as far down, but it does look like we kind of correct. Like we left some gaps in here. Gap fills. People say the word all the time, so maybe that's a thing. We're right at is this weekly RSI? Yeah, weekly RSI. We're kind of right in the middle of the channel here, and we've been in the bottom of this channel. Typically, we don't move into the top half of this channel. Obviously, monthly is like untouched. The monthly chart's depressing. But where's his PMO? Here it is. Here. This is his daily PMO, right? Yeah. I think maybe we have, I would really love to see a bigger move. Like we haven't seen something like that in a while. But I think basically I didn't, my thought was we don't really see too much until March. And I think, okay, this is a nice little catalyst here. Good excuse to juice up some volume, to juice up the volatility a bit, right? I pointed this out, I think, to begin the week, where it was just like, oh, hey, man, like we really ended, like IV was super low. You know, they had to do something. And for a couple weeks, we were talking about the possibility of de-internalizing those FTDs back from early December. We still got the ones. There's still a chance for another kind of juicer up there early February because of the 1211 and the 1212 FTDs. I think. I mean, that's kind of the end of the window. They could just be pouring that stuff on top of this. That's very possible. I think the case, I had some folks come like, oh, isn't this just Ryan Cohen buying? It's like, yeah, but he only bought 1 million shares, dude. Like, if the whole de-internalization thing is bullshit, if that doesn't happen, if delayed settlement doesn't matter, then like it's just 1 million shares. Like that's not going to change. That's not going to change the price that much. It's just 1 million shares. Like there should be enough liquidity that shouldn't affect the price very much. But the problem is like, see, this is the thing, right? The trading days are planned. They're planned in advance. What is supposed to happen, by and large, is scheduled and has been scheduled out, especially with the stock. There is some dynamic sort of reaction, but even something like Ryan Cohen coming in on the lit market and buying 1 million shares disrupts stuff too much. Even that messes with scheduling of, okay, this has to happen this day, and we need the price for this swap, and we need this for this, we need this for, and then we got to de-internalize this, and we'll take the FTDs here and we'll move this over to XRT, right? You have to imagine, right? Think about this. Who is it? I forget somebody who mentioned this, but it was something like, was it maybe Richard told me this from a guy who worked at Morgan Stanley or something? I forget who told me this, but there are, at some of the major financial institutions, they have desks that deal with GameStop. And the other question you have to ask is, why is GameStop still a restricted security years after these events that occurred back in 2021? If everything's fine, why can't you trade GameStop on margin? Why can't you take a margin loan to trade that security? It's just a stock. It's just it hasn't been hyper volatile for a while. Why can't you do that? You still can't do that on Schwab. Why can't you do that? In any case, Cohen's element here, they're going to handle his buy in the future, right? That anytime he punches in something, it's something they have to deal with down the road. And what I think, so like they're automatically going to FTD like his order or internalize his order. They're automatically going to do that. So he bought what, 20th and the 21st. So let me see. Let me bring up a little like calendar thing so you can look and we can count this out together. So if you guys didn't have a chance to check it out this week yet, I did post. So I know we've talked about this in the past, but I posted an article where actually over on it should be over on my page here. So a lot of what I did here is I broke down this particular formula from the Brno paper. Talked about this in relation to the FTDs from 12.2 and 12.3 on XRT and GameStop, right? So laid this out. Talked about the T+35 issue. Talked about the Brno paper a bit and sort of laid out their formula here. So really, like what you want to grasp from this, essentially, and my understanding of this is certainly very much enriched by conversations I had with Rich Newton. Really, so what the paper lays out basically is that, yes, the T+35 extension is in fact pertinent to calendar days and not trading days. However, T+35, or referring to T+35, is not sufficient in and of itself in order to understand what the actual timeline is for settling FTDs. So if you go out and you FTD stock, right, a fail isn't going to be recorded actually until T+6. So that first T+6 is 6 trading days, which is, it's actually a 2-day and then an additional 3-day for a total of 6 days that the trade has to be settled post scheduled settlement date. So it ends up being T+6. Those are trading days. Okay, at T+6, whoever has failed this particular security, right? Whoever has failed the delivery of the security that has to do in connection to the CTF that they're running, right, an authorized participant. The authorized participant, as long as they're engaged in bona fide market-making activity, they can then get an additional 35 calendar day extension in order to go ahead and locate shares of the security. What they must do is in the pre-market of T+1, from the end of that 35-day extension, they have to put in creation order. So creation order is when they bring ETF units into existence. And in order to bring those units into existence, they have to punch in the necessary orders to acquire the underlying securities that those shares of that ETF represent. Okay. When that happens, for liquidity reasons, they're allowed to stretch that out over an additional 4-day timeline. So this is something that was very helpful that Richard pointed out to me that isn't exactly clear from the Bernot paper. So yes, okay, something, if nothing has happened, right? If you're looking at this, if nothing has happened over the course of this time frame between T+6 plus C35, then over the 4 days following this, you can expect some sort of bullish activity, right? And so you'll notice them. They'll take the shape of VWAP orders. You'll see VWAP orders, right? We've talked about them a lot here. They look like diagonal lines, and they go up and to the right, and they sit right on. If you've got the 20-minute moving average, if you go down to your 1-minute chart and you put on the 20-minute moving average, they just ride the 20-minute moving average, and toward the end of that, they tend to kick up pretty violently, like right towards the end, and then dump, right? Then dump, usually back to VWAP is usually what happens. That's what that trading day looks like. So when you see something like that, right, when you see that type of move developing over the course of an hour, you wait until you get that kind of like asymptotic tail. It stops being a diagonal line. You get that little asymptotic tail, and then oh, okay, VWAP's done. Usually option sellers will wait for that, or maybe it's even algorithms. I don't even know at this point. And you'll see a bunch of short options come in, and then it'll get heavily sold, and it'll usually go back to VWAP. Doesn't usually go below VWAP, but it'll go back to the VWAP line. You'll see issues with that, especially if the 20-minute moving average gets a little bit too close. So, right, it'll kind of jump from the 20-minute moving average up to the 2 standard deviation VWAP line off the top. And that's you'll see that happen. I've seen that happen quite a few times. So you'll see that happen. That's how you recognize what's going on there. But of course, you have to be careful because that can take place depending on how big the problem is that they have to deal with. It could take place over multiple days. It could take place over 2, 3, 4 days. So we have seen some of that, right? I think back during the November run in 2024, November into December, especially the December portion of that, we did see a lot of that happen. Okay, so something that might be interesting, right, with Ryan Cohen stuff here, and what I would expect would be the case with Ryan Cohen's share orders here is what we're seeing now, I think, right? So what we're seeing now is the stuff that we saw from back in December. So I also sketched this out down here. Oh, by the way, yeah, this is right. This is what a 4-day VWAP looks like. We did get one of these. Pretty sure that's what these 4 trading days were after the Q2 earnings pump, right? So we popped. This was all like, I don't know, algorithmic stuff. Then we got down, shorted right here to 23 and change. And then we just diagonal up. And then right after this, we got our little dip cauldron, which is probably something like them entering a swap. and then we finished the top and then dumped into following the warrant issuance. Okay. So, right. So, I mean, obviously I posted this picture here, and these circled the days, the trading days in which we had 666,000 XRT FTDs and 2.1 million GME FTDs, right? So if you combine this, T plus 6 plus C35 plus T plus 1/4, basically you get this short week, right? So days 1 through 4, specifically from these 2 million GME FTDs, that's every trading day this week, right? So that's Tuesday, Wednesday, Thursday, Friday. Now they don't have to have all 4 of those days take place, right? The XRT one also has the Friday going into, it was also last Friday. So I wouldn't be surprised if, right, we had a little bit of, I think they probably started doing a little thing on the 15th, and then we sold off just a little bit on the 16th, and then whew, we shut up on this. Now, the reason I don't think this is Ryan Cohen, right, is, well, they have to cover this stuff. So this stuff is getting processed now. I wouldn't be surprised in here if there were some FTDs that show up. We're not going to know for a little while. But I wouldn't be surprised if there were some FTDs. Actually, yeah. T plus 6. It might not show up for a bit, right? So T plus 6 from that is going to be 1, 2, 3, 4, 5, 6. I don't know. It's going to depend if the FTD report ends up covering. It's going to depend on how if they have access to that data. But in any case, right, that's what's going on right now. So we can count forward, right, under the same logic, and we can say, okay, where's that going to end up? And let's see, let's pick up these dates here. So we are here. You guys see this? Yeah, let's blow this up a little bit. So 21 is going to be T plus 1, 2, 3, 4, 5, 3, 4, 5, 6. 29th is going to be T plus 6. Then we have calendar days, 1, 2. Let's see, right? So this is 30th to 30th is Friday. So we have 7, 14, 21, 28 on the 27th. 35 is going to be March 6th. And then T plus 1 of that is going to be on the 10th. So between the 10th, I should say the 9th, and the 13th of March, so the week before OPEX, is when Ryan Cohen's order would be due, I believe. If they do FTD his order. If they dark pool his order and or they FTD or whatever, then that's when it should show up, which may complicate things going into OPEX and going into earnings. OPEX, again, there aren't warrants tied to it. It's not a quarterly OPEX, so that's not as much of an issue. There's very little OI there right now. Maybe they keep us a little bit up. You know, maybe kind of we get a bit of volatility here in maybe early February. Then do some kind of options crush. Maybe, you know, there's some volatility here from the 1211 and the 1212 stuff in February. Then we get a little bit down into February OPEX, and then post February OPEX, maybe they crush us into here. A little bit of a reprieve in the second week of March here. Back down again into March OPEX, back down maybe into earnings, which I think is going to be the 25th. And yeah, if they move us into that and we're down, then I think maybe we go up again. And then they can drop the bomb of, yes, his pay package was approved. And they can go like, Ryan Cohen? Is Ryan Cohen Rob Schneider? Yeah, something like that. That's a plausible scenario for me. So something like that. Let's take a look at chat. Hopefully that's clear. Kai says, what do I think of 126, 23.5C? Wait, 120 what? There isn't a 126? There isn't one? I don't know what you mean by that. Oh, 30. Gotcha. Not a bad return for a week if we close below there. Gamma wise, what are we looking at right now? Gamma's ratio is very positive. Very interesting to see us close in the money like this. What are we looking at for next week right now? They're going to roll a bunch of stuff. Right now, call wall for next week. Gex call wall is at 23. With 24 above it. Oh, you might do okay with the 23.5. You got to break even to that, I think, at what, around 24 bucks? I mean, right, worst case, you can just roll it. You can go out into the side. So, you know, not a bad trade. Not a bad trade to go short on if you don't have you know, if you're sitting on shares and you want to pick up a little value, you want to hedge a little bit to the downside, that's fine. You know, that's a fun trade. Let's see, to hey, you changed some of your letters to capitals. I notice. Always got my eye out. Yeah, we might. They're really they're keeping us here. I mean, this is where Gex is. So this is where Caldwell is right now. So by keeping us here, number one, we're probably getting charm pinned into this spot. But also they can do little moves that are going to cause sort of at the money pretty decent swings in price. And there's still a lot of volume getting pushed through this stuff. There's a ton of volume getting pushed through next week. Whoa. Yeah, those are very gamma sensitive right now. Anything at the money is super gamma sensitive right now. For this week, it's not. But for next week, it's very gamma sensitive. So keeping this right here means you're getting a lot of couple cent swings. And anybody who's got an advantage in terms of being able to get the right stuff on the right side of the bid ask, if you got a bid ask advantage somehow, if you got a spread advantage, then you can take advantage of that. You're loving this right now. Ooh, interesting. Taking a look at where Bottom Finder says on the monthly. Let's take a look at Bottom Finder. Yeah. Weekly's been doing some things. How about that? Let's get rid of. Actually, weekly's been something, huh? Let's make it a little bit bigger. Yeah. So honestly, we might have local bottomed in there. Ooh. Let's see. Though it's closing up, so Daily obviously has been nuts. Look at this. Yeah, they really kept us down there. But Tom is looking at. Ooh. Yeah. Oh man, if this thing goes off. Oh wow. Actually, oh man. Oh man. This we might, guys, like April. Like April, May. We might. If this flashes, if this flashes and we get weekly PMO cross stuff, we might. Like, I mean, again, give this guy some time. Give this guy a couple months to come down, but yeah, good call, Tom. Chad, are we raw? Chad, are we inverse cooked? Chad, are we burning shorts? Virginia Slims only. Chad, are we raw? Oh, this was in response to my question about Reese. Because I'm not a bot or engagement farmer. I am not actually. Oops. Guilty as charged. Do I think we're going to touch 22 soon? Um, Again, I wouldn't be surprised if we do. I have a hard time thinking we just go straight up from here to, to earnings. I don't think we do that. That doesn't I don't see, it doesn't mean that can't happen. It just means that I haven't seen anything that would make me think something like that would happen. Usually there's some indication, there's some sort of, there are signs, right, that we're just going to abandon where we've been. It doesn't usually come out of nowhere, unheralded, something like that. Based on the stuff that we look at. So I wouldn't be surprised if we saw, but certainly between now and February, some sort of retrace to $22. Yes. Bullish hammer candle to close the day would be cool, though. Let's see this thing. Yeah, I mean, maybe there's one more sort of let off some steam, Bennett. Why don't you let off some steam, Bennett? Is it commando? Commando. They have built a Tower of Babel. Bruce Wayne. This is Corey. Corey's got a new username. I like it. I like the stock. What's up, brother? How's it going, man? Welcome to the party. It is the stonk. Pro Styles is right. This is the stonk. Yeah, interesting. Bow to your sensei. You can't buy GMA on margin, even at direct access professional brokers like Lightspeed. Yeah. Yeah, no one will let you do it. And there's no explanation why. As far as I know, there isn't for all intents and purposes, GME should be a regular stock. It's if any of the behind the scenes market stuff that we talk about on a regular basis is all bullshit, then why can't you buy GameStop on margin? It's a normal. If all the stuff that we talk about regularly is not real and it's all, it's all populist conspiracy, then why can't you buy GameStop on margin? It's a normal stock. They sell video games and raise $9 billion. Come on. I like this. I like that. Danica 02. Yeah. Yeah, that's dumb. Oh, nice, man. Yeah, that's cool. Yeah, because you can just how would that work? Yeah, because you can just exercise. Things might happen. Things might. Yeah. C6, D6, C6. You make a good point. It's important that yeah, especially metals. The inputs for bottom finder are they're in quite uncharted territory. What's silver? Has silver hit 100 yet? I can't see the actual price here. Oh, yeah. Yeah, wow. Silver's at 102. Silver's at 102, guys. It just keeps going, huh? Look at this thing. Look at this. Look at the monthly chart here. Look at this thing. Have you ever seen a chart like this? Guys, this is not a meme stock. This is physical silver. Guys, this is even crazier than the 1979 silver squeeze. Yo, the Silver brothers just needed to hold for another 40 years. 40 7 years. They would have been fine. They would have doubled their money. Who are the brothers? Who are the brothers that sold? Who are these Silver Squeeze brothers? Silver Squeeze brothers. The Hunt brothers. Nelson and William Hunt. What's gold doing? Is gold still cruising? Yep. It's almost at 5,000 an ounce. What? How do the markets absorb this is really the question. Like, why are we just perma bulling? Has stuff just been like, is this all just been so crazy suppressed for so long that this is what it actually looks like when you take your hands off the scales? Just years of mispriced inflation getting priced in all at once. Hey, what's up, Kurt? Good to see you, man. Ooh, Zachary Schneider. The cool tip here. So you can buy it on margin in an LLC account on Schwab. Interesting. I also noticed another weird Schwab trick. I don't know why. Why is it always Schwab though? I don't know what. Like, why do these guys have this kind of like? Why can you do this with Schwab? I keep finding weird shit with Schwab that you can do. So okay, so I noticed this. If you have uncleared funds in Schwab, and you want to go buy GameStop, if you just put in like a random order for shares, it's going to be like, sorry, you need to have cleared funds deposited in order, whatever. Even if it's a margin account, it's like, sorry, this stock isn't available to be bought on margin, blah, blah, blah. Okay. Here's where all of a sudden that doesn't matter. Just put in an order for 100 shares. As long as it's a 100 share block, you can force through 100 share blocks. If it's 101, if it's 500, if it's 95, it won't go through. But if you put it in 100 share blocks, suddenly you can buy on margin. You can only do it up. You can't overextend. So you can't go past the uncleared cash limit, but you can use the uncleared cash to buy shares. Only if you do it in 100 share blocks. Another trick that I found that I don't know why you can do that, but you can do that. Demik says, besides 2 million FTD, was there any other big signal? I haven't followed for 3 to 4 months that closely. Like I said, there was some stuff on the 11th and the 12th, not 2 million FTDs. I think it was 800 something thousand XRT FTDs. And I think the GME number was more modest. It was maybe a couple 100,000. $300,000. Not crazy, but decently sized, especially for GameStop. We don't even have January FTDs yet, so still waiting on that. So we're looking like GME in 2021. It is, man. It do be like that. Do we close at $22.99? Did we? We did. That's very fun. And Ivy went down more. Sure did. Got that little IV dip into the close. Options price down a little bit. It's just very funny. It's very funny to watch that because like I'll check in, right? I'll check in my portfolio because like I have like a bunch of cover calls sold out, especially in February. And it's like the price stays the same, right? It'll come down and like okay, the price will come down, like the share value will come down, and so it'll depreciate, and then they'll get evened out a little bit by the calls, but then it'll go back a little bit back up, but then IV will come down. And so even though it's closing at 22.99, like the portfolio value is higher than it was when the shares were lower and the covered calls were higher. It's just very funny to watch that happen like that. Kamika says, I think they're just printing money because it doesn't make sense for silver gold stocks to reach all-time highs at the same time. So how would you make sense of this? I would say, yes, they are like, there's all the money from 2022, 2023 been priced in. There is, I mean, there still is inflation, right? There still is like 3-ish% declared inflation. So it's probably more like 7. Right, you guys have heard my shadow stat spiel a lot, and I think this is likely the case. Right, so shadow stats, I love this. I bring up this chart all the time. You guys know I love this chart. This chart, why? Why do I love this chart? This chart made everything make sense to me in terms of why in 2022, because like, man, I don't know about you guys, but like, I used to be I used to be an adventurer like you till I took an arrow to the knee. That's my story. That's my story for 2022, 2023. And like basically, as I understand it, it's like we lived in an incredibly abundant time between like in terms of pricing and stuff from like 2013 to 2020 to 2021. And the Fed decisions for 2020 and 2021 resulted in probably the craziest period of inflation in the United States that we've seen in maybe 50 years, maybe since the 70s. And I couldn't make sense of why, okay, it's quite something to see an inflation print come out as 9.7, which was the official. You can see this little curve. You can see the 2022 number on this chart here, right? It's quite something to get a 9.7 print on CPI year over year. That's quite something. And for it to stay up here, like that's, look back, right? We don't have anything since the 70s, essentially, right? But somehow it didn't feel like prices were just 9% higher, right? Because I remember going from paying like $15 for lunch, maybe $18 for lunch in a restaurant to being unable to pay under 30 in the span of a year. And I was like, wait, how is inflation overall 9%, but lunch prices are up 80? I don't get how that could be the case. And so, why is the stock market pumping? Why is okay, the stock market, okay, I understand it pumped then and inflation was delayed now, but like these numbers don't make sense to me. Shadow Stats basically says, dude, I was having a Coke, soup, and chicken salad at a Greek diner, dude. I'm not kidding. Like, this is not insane, bro. But he got a soda, he got a cup of soup, and he got like a Greek lunch salad with chicken. Oh yeah, $30, right? Yeah, man. So what I realized, right, this is something that I think when we were in Thailand is when I think I first presented this to you guys, when I first, really started looking at what was the data for ShadowSat stuff, and understanding that basically, right, CPI calculation was changed in 83. There was another major change in 93. And that basically the difference between real versus reported consumer prices, or the consumer price index, right, inflation, the difference between them increased, okay, all the way up until 08, and then it stabilized. It didn't come back down. It hasn't equalized anymore since 08. It's remained the same. So the difference from 08 on is that it's remained the same, which is to say off by anywhere from 5 to 7% from real inflation. So something like, something like this. So we pretty much were living in this kind of 5 to 7%-ish regime. And for a lot of stuff, that's not that noticeable. How those prices, because, you go by 5 years, you're like, oh, this is definitely more expensive, but, inflation. And then this stuff, obviously, right, instead of being 9%, is really something like 17%. And then when you realize that from 2021 to 2023, you're looking at like, this comes out to being like 60 to 80% cumulative inflation. So yes, obviously there is still inflation, which is far more elevated, right? They say 3, and when they say 3, they mean 7 or 8. And I think part of the way that this is not seen in certain prices, I know specifically the Trump administration tries to target oil prices to bring down a basket of more notable stuff, right? So if you target energy costs, if you can make energy cheap, that's so okay. Another thing, that's really what happens, right? When food gets more expensive, it's because fuel is more expensive to get the food to where you are, right? That's usually what that is. So this is something that Trump did in the first time around, and this time around is like try to target and pursue policies that that bring down energy costs, because the idea is if you bring down energy costs, then some of the more noticeable, so it's gonna operate as a two-edged sword. One, you're gonna make a number of the things that consumers care about a lot. Okay, they care, yes, on paper they care about gas a lot as like a symbolic price, because the price is always posted like in big numbers, like when you drive around everywhere. So it's a symbolic price, and you can score some nice PR wins for doing that, because that's a price people are looking at and seeing all the time. So for a lot of ordinary people, I guess they use that as an index of how well the economy is doing. So okay, but okay, you got that for PR wins. It can stop food prices, right, from going up like crazy. I think beef is down like a little bit. The eggs thing was like another meme thing, but okay. And then the idea is to then, okay, fuel prices come down in some other industries where people don't necessarily notice what pricing is like. They can show increased GDP growth. They can show increased contributions to GDP, because if they're affected by fuel prices, then that's gonna contribute more positively towards their margin. And then you get to say you had a nice GDP print, which they did, and then you get to score a PR win that way. And right, so this is how this goes. Now, overall, it doesn't necessarily what you want, I guess. What you want to target is you want GDP growth to actually outpace inflation. So if real inflation is actually 7%, then a 5.4 GDP growth doesn't actually matter as much, right? I mean, it's better than having a 2% or a 1% GDP growth and having 7% inflation, because then most existing goods are just eating the price of they're just eating the inflation. If you've got 5.3 GDP growth, but you've only got 7% inflation, okay, a lot of that inflation is it's properly mapping to the expansion of the GDP. Not perfectly, obviously. There's inefficiency is still working its way into pricing, but I don't know. I'm sure there's some way to figure that out so that it makes more sense. But yeah, there is inflation basically going on at a high rate the whole time. Now, what is likely the case, what I would expect with the precious metals stuff, is that precious metals have likely been held down artificially for too long, for an extended period of time, despite the fact that we've had so much inflation. Like, take a look at gold I guess this is silver, right? Silver from 79 all the way to 2003 didn't go anywhere. So, and then it started to grow, and then it corrected a bit, but like, man, I'm sure if you held this up, right? If you did the math on this, this should track US dollar inflation more closely. No, this is gold, man. This isn't even silver. This should track, right? There's no reason for gold to have done it. This should track the dollar much more closely than it does. This should inverse, right? This should, if you do a dollar versus a dollar in whatever, 1970, whatever, this should just inverse that. And there hasn't been, not perfectly, because gold is also for other uses, so. But it should more efficiently track that rate of inflation. And if we look at this in 2022, 23, nothing happened to gold. Why did nothing happen? Okay. Year over year inflation from here to here was a declared 9.7%. Shadow Stats estimated over 15%. And gold, once that print came out, gold went down. How does that make any sense? Literally, that price, right, that's an inefficiency, because the US dollar is devaluing relative to gold, and yet on the market, gold's price is going down. That can only happen based on internal forces with the running of the market, with market making. And I think to a large degree, what we're seeing now is stuff like that, right? This inefficiency where everybody's scratching their head and going, what? How? From 2020 to 2023, the cumulative inflation of the dollar was something like, actual money supply inflation was something like 200-something%. And the average price of gold across that entire time period was unchanged. This is 3 years. The average price of gold across this period of time was unchanged. And dollars inflated by more than 200%. That doesn't make any sense. So what's happening, and what has been happening, I think, is, okay, this had to get expressed somewhere. So it got delayed by 3 years, and now it's going to get worked in. And I would not be surprised if gold, okay, what was the average price of gold in this period? The average price of gold in this period was around $1,800. So let's go 1850. Okay, so just this inflation, just this year, should have taken us to 4,000, which it hit just a couple months ago. Okay, now if this is this 3 years of inflation getting priced in, how much has happened between 2023 and 2026? Got to be at least another 20%. So multiply this by 1.2. That takes us to 48.84. Okay, we're a little bit above that now, but yeah, you see, this is what I mean, right? This is what I mean. If you use the shadow stats numbers, the pricing works out on shit. It just happens to work out on shit. So it's like, this is a major, seriously, like this is a major hack. If you see, the government, if the government does this again, right? If there's another, if QE happens again, whoever does it, it doesn't matter the administration that does it. All the administrations fucking do this stuff. Okay? They all do this. No one since 93, no one has done any differently. Okay? So if they keep doing this stuff, this will express itself. You might have to wait several years, but this will express itself eventually. It is like there is an efficient market in it, like there is, but it gets stopped up at times for several years based on market making, bona fide market making activities. So that's what I think about that. Yeah. Yeah, right. And of course, this whole rotation thing is how this stuff, a lot of this gets either masked or rotated into BTC, ran BTC, then rotated out of BTC into precious metal. Yeah, sure. Rotational forces. Demik says, are these high prices for gold and silver good for GameStop? I don't know. I would say someone is positioned somewhere to take advantage of this, and they understand why this is happening. Whatever the real reasons are. So they're positioned to take advantage. When this run is done, someone will know, right? Because someone will be the one to go, okay, now it's time to rotate out, right? What Mass is saying here. It's time to rotate out. And then where do they rotate back to? Do they go back to BTC? This is BTC market cap. I don't want BTC. I want BTC USD. Maybe. Oh, look. I mean, it's just been flatlining to the side there, huh? Maybe they go there. Maybe they go back to GME. Maybe that's a place they go, especially if we're about to get some crazy cross. Let's see what institutional filing deadline ends up looking like. Ooh, 13G from Ali Ahad Turker. No, he's got some shares. He's got 279,000 shares. 69,000 shares. Not bad, dude. How much is that versus this previous one? 2025 is when he filed, right? Oh yeah, he basically doubled his position. More than. Not bad. Sitting on 6.2 mil right now. Not bad, brother man. How much do I believe in Bollinger Bands on macro time levels? I don't really use Bollinger Bands. It doesn't mean that you can't use them for things. I don't really look at them. I know that there are folks who do. I'm not exactly sure what they measure is the thing. What do they actually measure? So, okay. So is it just standard deviations off the 20 period moving average? Oh, yeah. Okay. So Bollinger Bands are based off of a 20 period moving average. So I kind of do, in the sense that I use VWAP as where I'll do that kind of standard deviation look. And then I'll look at, I sort of layer a bunch of different moving averages. But um, you know, I would say that, moving averages do matter. They can tell you things at various time frames. Um, the question, I guess, of do standard deviations matter there? They do sometimes for VWAP. I'll say this: if they matter for algorithms, then they matter. That's all. That's all I'll say. But I don't know if they do. What is Domo Capital? What is Domo Capital? He sounds like he's got a Polish last name, Dopierawa. He's been retweeting Cohen and stuff. Oh, Ryan Cohen also tweeted. Do you guys see this? Who's the one Wall Street analyst actually worth talking to? Cohen Burry collab. Hey, look, it's Kurt. Keith Gill, please. Yeah. Always sad but truthful. This is the fine analyst. What? Who's this? No. An anal joke. He's probably trying to get solicitations in order to do another interview. That's my guess. Oh, to Domo. Oh, Domo arigato, Mr. Rocket Shippo. Yeah. So they retweeted this. I don't know, man. Maybe I'm about to get assigned and miss the moonshot. What's this guy? What's he? Unite the clans. Oh, okay. They made the announcement today. And I don't think we'll be the only one back. Why were they in the documentary? Does anybody know why they were in the documentary? What did these guys do? Why were they featured? Who are these guys? Like this is the thing that's like who got chosen to be in the GameStop stuff? Like who are these people? Who's Justin Dopierawa? Like why does his name sound Polish? Does Roaring Kitty follow Domo? Let's see. Who's Roaring Kitty follow? Elon Musk. Valuations, Rhoda Fortuna, James Wong, Trader Stewie, yeah. Oh yeah, he does. All right. Maybe they're tight. Maybe they know each other. But again, why were they in the documentary is my question. Is he the foremost in the OG gang of 2021? Amit, I may be ignorant. I mean, I'm ignorant of many things. I guess I wasn't really on Twitter back in 2021. Actually, I was pretty much exclusively Reddit. So I'm not surprised if I don't know names from Twitter. Yeah, they do. I have to see the Netflix documentary. Oh, he knows Justin. Okay. Hey, hey, that's cool, man. Hey, whatever. Hey, if we got, we got some more support, you know. Good stuff. Yeah. So let's see what happens. You know, PMO stuff there is worth keeping an eye on. I wouldn't be surprised if a little bit of this bullishness was meant to be a little bit of a FOMO drag in, kind of a little bit more, I don't know, juice up the options a bit. It doesn't seem to me like we're quite there for a bigger blast off. We love our Rainbow Road period. I think we've been talking about this for months. I think March, right? I think it's March. I think we wait until earnings. Expectations are high, but maybe we cruise a little bit on the announcement of pay package gets confirmed for Ryan Cohen. Obviously, kind of early mid-ish March, they're going to have to deal with these purchases from him now. So we'll see. Ahmed says I need to watch the documentary. We'll see. We'll see. Chad, are we cooked? No. You might. Well, I guess it really depends on when you sold those. You might not be cooked. Like, remember, if April OPEX comes and we're like at 24 or whatever, like, okay, you're getting a sign on the 23s. But the 25s are still out of the money. I would say, as a rule of thumb, right? I don't like to sell far outdated stuff when IV is really low. If I don't think we've got, I wait for like a little kick up like this, and then if I think we got a lot, down the line, like maybe. But again, it's going to depend how you turn out on those. It's going to depend on when exactly you chose to sell them. So, hey man, worst case, you get to the end of the rainbow and then you just roll them. Something like that. Just make sure you always do it for credit. That's the way you stay alive. All right. I think that will bring our soiree to a close for this evening. Great stuff, exciting stuff. Always happy to see. GameStop having a little life in it. I was going to sleep there for a little bit, but exciting stuff down the road. Like I said, we're getting pretty close on some of these crosses on these deeper things. Couple more weeks. We'll see what PMO does. We'll see what some of our deeper RSI stuff does. But that little kind of bottom finder combo plus PMO, a couple months out, I think maybe we push it maybe 6 weeks. We make it into March. I think so. I mean, that's a little hopium on my part, right? Because I'm also short some calls that I would like to see give me a return. And then also be able to ride that, a little hopium on my part. You know what I like to do. But, I'll just be honest with you guys. That is what I thought. That is why I made those trades, right? But I'm also not as far out as April. So have a great weekend, everybody. Looking forward to seeing you guys, on Monday morning. And, enjoy the elevated account valuations for the weekend, right? Dust off the shoulders there. Try not to panic if the calls are in the red, right? So awesome, guys. We'll see you later. Thanks very much, as always, for a wonderful live stream. Talk to you very soon. Bye now.